Hi everyone, welcome to the Sygnum Bank July House View. Thanks for joining us again. The theme for today is crypto breaks from the global markets. So Katalin Tischhauser, our head of investment research, is here again for another exciting session. As always, all content and opinions presented in this live stream are not investment advice. So let's get going. So crypto might be breaking away from global markets as we see Bitcoin, Ethereum, and other crypto majors suffering a correction, while global stock markets are actually hitting all-time highs or new record highs. With the SEC conducting its investigation into Ethereum's proof-of-stake version, it looks like proof-of-stake model could be in a more favorable position. And also with the approval of the spot Bitcoin and Ethereum ETFs, maybe we're seeing the start of the Solana ETF hype. So first up, Kat, is crypto decoupling? So there's a lot happening right now. Let's start here with crypto potentially decoupling from global markets. Over the past few weeks, the S&P 500 and NASDAQ has been on a roll, hitting new all-time highs and ending June with a new intraday all-time high on the 28th. In contrast, the crypto market has been mostly in a correction. So let's start with what's behind this.
Yes, indeed. As you say, and we have the chart to demonstrate this, crypto has been driven by supply and demand trends all year. Initially, this was skewed to the demand side. After the Bitcoin spot ETFs were approved in the US, there was a lot of fresh demand, and that being the primary driver. And when that demand weakened, the market correlated highly with it. Now, recently, the supply side has taken over as there have been some bankruptcy procedures that coincidentally all came to fruition around this time. One is Genesis that started distributions. The other is this 10-year-old Mt Gox bankruptcy, which is starting distributions now. Also sudden selling in the case of the German government, but basically selling from the German and US governments, quite significant amounts. This is crypto that they seized through kind of from various criminal activities where there were crypto assets held by the entities that they're prosecuting. And also, all of this was exacerbated by minor selling, minor capitulation. Basically, what happens is that when Bitcoin prices fall, more and more miners become unprofitable and they have to sell some of their Bitcoin reserves to fund their operations, which actually puts more pressure on the Bitcoin price. It's kind of a vicious cycle because that makes even more miners unprofitable, and the selling can continue for a period of time. So we have seen recently these very negative supply trends. But to come back actually to your question on decoupling, I would say that despite the popular narrative that global macro drives crypto, it demonstrably does not, other than for occasional brief periods. What does happen is that multi-year crypto bull cycles have tended to coincide. In fact, until now, they have entirely coincided with periods of loose liquidity conditions. But to be honest, this is a bit of a Barnum statement because such conditions benefit all asset classes, actually. And the daily correlation between crypto and other is usually there are short periods when it's high, there are short periods when it's negative. But usually it's on the low side. And what we have seen in the last 1.5 months, as the chart shows, is very strong negative correlation, the two markets or risk assets and crypto moving exactly in the opposite direction. Basically, risk assets interpreted the June FOMC meeting, the May CPI print, basically interpreted it as dovish/bullish. Jerome Powell usually speaks in riddles, as is his job description to do, and then it's up to the markets to interpret it. But clearly, risk assets concluded that already his statements in June were leaning to the bullish side, And he made more statements yesterday now, clearly dovish statements, saying for the first time that even though it's important that inflation is under control before they cut, but it's also important not to wait too long to cut, because that poses risks to the economy as well. Keeping risks too high for too long is also a risk that they're keeping an eye on. It's the first time he said that. So now it's clearly more bullish. And for now, crypto has not got on board with this narrative. It's been correcting and going down. But having said that, this macro backdrop is a positive backdrop for the continuation of the current crypto bull cycle.
Sure. But looking ahead, do you see any drivers that might influence perhaps the end of the correction? What do you think is behind this?
Yeah, like, it's obviously is the question on everyone's minds, but there are a number of strong medium-term drivers. That is definitely the case. The political shift in the US is significant. This is very important. The political and regulatory risk in the US has kept a lot of large pools of assets away from the crypto market. A resolution and the positive turn there is really important for the crypto market. Now, as of, I think this was disclosed maybe yesterday or the day before, supporting the crypto industry is now formally part of the official Republican Party platform. And we have heard, of course, a lot of pro-crypto comments from enthusiastic pro-crypto comments from Donald Trump. It's not, of course, the same on the Democrat side. We're not hearing the enthusiastic pro-crypto comments. However, previously, we heard a lot of very negative rhetoric, and that petered out. So that's one important factor. Another one is that we have good reasons to believe that there will be more sizable demand for the Bitcoin ETFs, and hopefully over time these Ethereum ETFs as well. And the reason I'm saying it is that the largest asset manager and the largest Bitcoin ETF issuer, BlackRock, is saying so. They're saying that they're in touch with large institutions, even sovereign wealth funds and the like, who are going through a due diligence process and intending to make allocations. So that I take that input from the world's largest asset manager quite seriously, and I think it is very likely. And the other ETF issuers actually give sort of similar comments, make similar comments. So I think it's reasonable to expect that this demand will indeed materialize over time. And as we already mentioned just before, the global liquidity conditions are likely to loosen. We have more and more data points now, especially since Powell's comments yesterday, that is going in that direction. So that's an additional positive. So that's sort of the medium-term outlook. But then the question is, what can arrest the correction in the short term? And obviously these supply trends, a lot of supply coming to the market, has been difficult for the market to absorb, and obviously affected sentiment, which moved to fear. So we will need to see what happens, especially with the Mt. Gox distributions. Now, very large numbers are being mentioned here. $8 billion worth of Bitcoin to be distributed. Actually, there are certain reasons technical reasons why only a portion of this is going to be distributed. And that portion is roughly 40%. And after that, the question is how much of that is likely to be sold. So basically, this is going to a very large number, I think about 20,000 individual holders. And these are people who bought their Bitcoin in the early 2010s. So the expectation generally is that the kinds of people who will be receiving these distributions are not weak hands, they're strong hands, they're long-term crypto believers, so not likely to dump. Certainly, it's not likely that if the market is in a correction and falling, that they would be dumping into a falling market. I think that's irrational behavior and investors don't tend to do that. Basically, the market's expectation, and this is not really based on any science, it's just the consensus that seems to be out there, is that maybe 10% of what will be distributed to these investors will be sold, which would be 4% of the total. So that's a very much smaller number than the $8 billion worth of Bitcoin that's being talked about. So we'll have to see what happens there. Also, the question is when the German government will stop dumping into a falling market. Impossible to predict. It's now triggered a barrage of memes, but because there are much sort of other avenues for selling which minimize or mitigate market impacts. So kind of selling in a way that maximizes market impact is not the most rational approach, but it's obviously not possible to predict what the German government might do in terms of halting the selling or not. And the other short-term issue now imminently on the horizon is the launch of the Ethereum ETFs and how that's gonna out in terms of the initial demand. And there's obviously a risk that the initial demand with grayscale selling and so on, we have talked about this in the past, that it may initially disappoint. That's a possibility. I think just as other medium-term drivers are in place, I think on the Ethereum ETF demand, the medium term also looks very positive. Yeah.
Let's double click on Ethereum there. Certainly in our last live stream, we discussed a pro-crypto shift or potential pro-crypto shift in the US political landscape that enabled greater institutional involvement. With recent regulatory development, SEC approved the Ethereum ETFs as commodity ETFs and completed its investigation into Ethereum 2.0, deciding not to pursue charges that the proof of stake version of Ethereum, of Ether, is a security. Looks like the proof of stake now is in a more favorable position. So can you kind of deep dive, I think, more into the dynamics of this?
Yeah, thank you for asking this question. I think this is so important, and especially in the midst of the negative sentiment and a lot of supply pressure, it's quite overlooked that there was this very positive development, and it is what the developments that you mentioned, that the SEC concluded its investigation into the proof of stake version of Ethereum. That obviously Ethereum ETFs are a commodity and so on, but there was another ruling on the BNB token, Binance's, the Binance chain and Binance's token. And this ruling is similar to the 2023 ruling on the XRP, in the Ripple case. Basically, the federal judge saying that the BNB token is not a security when it's traded in the secondary market. This is actually, she used the precedent of the Ripple ruling, and it's an identical ruling on the BNB token. Now, actually, so this is significant because here's another proof of stake token that's now a federal judge says is not a security, but also it's even more than that, because the BNB token is dual purpose. It's the token of the Binance chain, but it's also supported by the revenues of the Binance exchange, which is a centralized corporation. And from the revenues of the exchange, they conduct token buybacks. So it's actually a dual purpose token. And even this structure was ruled by a judge not to be a security. So I think at this point, the various data points you already mentioned and this ruling, it's really looking like that the proof of stake cryptos are out of the woods, and with proof of work already de facto not considered securities, and proof of stake having been sort of the contentious issue, it looks like a very large portion of the crypto market. It's not a final enshrined in law end to this question, but it's really looking at this point that this risk has largely been removed. It's very important for the market.
Yeah, I mean, naturally flipping to another large ecosystem in Solana, following the recent approval of spot Bitcoin and Ethereum ETFs, Van Eck and 21 Shares are now trying to get an approval for a Solana ETF as well. However, the sentiment in the crypto space is altcoin ETFs might face some significant regulatory issues. So how likely do you think this is to be approved?
I don't know. I'm sort of leaning a little bit on the not that likely side, at least in the foreseeable future. Like, but if you look ahead, it depends on the time frame, right? So if you look ahead to 2026 and beyond, anything can happen. But if you're just considering over the next year, is it likely? And it's of course possible. I think it's not that likely, but actually these issuers originally filed the S1 prospectuses, which are not as important. They don't have a deadline. But now yesterday, the 19B4 forms were also filed, and these ones do have a deadline. The SEC has to approve or reject, and this deadline is now March 2025. So that's a significant step. And obviously the market's quite excited about it, or some in the market are quite excited about it. But the hurdles are massive, because for the SEC, there has to be a surveyable market. For Bitcoin and Ethereum, this was the CME futures. There are no futures on Solana. The CME said last month they have no plans of having Solana futures. They might at some point, but this route doesn't fit with the March 2025 deadline. And for crypto exchanges to be considered surveyable markets by the SEC, a lot has to change at the SEC. And that's what the market is betting on. That's what basically people are saying, that with a new administration, this is likely to happen. And hypothetically, of course, it can happen. There is a path how these changes could materialize if there is a change in the administration. But practically, it's not that easy, and probably not that fast. And I would also, maybe my even bigger question than sort of the difficulties of how this change would actually happen, and what would be the chain of events that takes us there. My even bigger question is on demand for Solana ETFs. Anybody who is seriously interested in crypto will trade spot. I think your universe, if you really understand the crypto market, you know what's going on, you know what Solana does, you know how Solana competes with Ethereum, what the pros and cons are, then you probably don't need ETFs, and you probably want a wide universe, the full universe at your disposal. And ETFs will only give you a very narrow universe. If there's a Solana ETFs, now you have 3, but even if there's another 10, for anyone serious, whether institution or private investor serious about crypto, and really understand, really look into it, you want access to the whole market. So you're much more likely to trade spot. And people who are not that familiar with the crypto market, for whom the ETFs are really an important vehicle that they can access. The name recognition of Solana is extremely low. Even Ethereum has half the name recognition of Bitcoin, and after that Solana much less than that. So I'm not saying that there would be no demand. It just doesn't look like this is a substantial amount of money that would also create a political pressure, because there's just so much demand for this. And I think, to me, what would be maybe the biggest factor that would change my mind or would change the picture is if BlackRock filed. And being the world's largest asset manager, dominating the ETF space, with the track record they have and the insight they have into what their clients are looking for, that would be a very significant signal. Now, BlackRock's public statements so far, as was quoted in the media, have been that they said very, very little demand for anything beyond Bitcoin and Ethereum. Now, they said this a couple of months ago. Things might change. They might see it differently. So I think if BlackRock feels that there is something here that's worth for them to go for, that would change my opinion. There are rumors that BlackRock will file, but the rumors quote absolutely no source. So that's always a little bit suspicious. That doesn't, rumors may be true, who knows, but definitely they don't lead back to kind of any fact or source. So who knows? If there is a BlackRock filing, I would start taking the Solana ETF issue seriously. If it's just smaller issuers filing, I don't think that that would carry the weight that there would be a tremendous urgency to overcome the structural issues. For example, getting a definitive answer to whether cryptocurrencies are securities or not. There's all these bills going through Congress and the Senate, but I mean, the legislative process is not fast. It's not fast. It's not a March 2025 process.
Yeah. So moving from rumors to fact, US Bitcoin ETFs have seen the largest outflow yet, with $1.5 billion withdrawn in 2 weeks in June. There's been talk about institutional buyers of Bitcoin ETFs revealing substantial hedge fund holdings, sparking perhaps some speculation on whether initial flows were actually mostly market neutral arbitrage trades. So do you think the ETF flows have been mainly driven by this factor so far?
No. It's a factor, but not the main one. It's not an insignificant portion, but it's definitely not the main. It has not been the main source of demand, or certainly there is no evidence that was the case. Basically, what people have been saying is that a lot of these trades basically are not actual new demand because they're market neutral. So it's this CME arbitrage where the implied funding yields in this Bitcoin CME futures can be arbitraged with shorting the futures going long the ETFs. And so we can actually just have a look at the size of hedge funds open interest on CME Bitcoin futures, right? And the change in that since the Bitcoin ETF launch, and we can have some sense how big this trade might be. And that increase was about $4 billion. So that's if we assume that all of that increase was because of this arbitrage trade. And I mean, not necessarily, right? Like it could be that some macro hedge funds actually went long, or the hedge funds actually went long crypto, or actually put through the ETFs, or actually put short trades on the CME that had nothing to do with actually doing the arbitrage trade. So, but even if we assume that 100% of this change in the short open interest on the CME by hedge funds was because of this arbitrage trade, even then that's about 30% of the ETF inflows, so definitely not the majority. So not insignificant, but definitely not the majority. And there was also this argument that there was a change in these positions from spot to the ETF, but actually the evidence for that the Bitcoin withdrawn from exchanges, that change coinciding with this time frame was extremely small. So it might have happened a little bit, but the size of that, as far as the data tells us, that was extremely small. So there are these market neutral trades with the Bitcoin ETFs, and they are sizable, but they're definitely not the main driver. The majority was actually fresh demand for the ETFs coming into these new products after they were launched. And I would also say that this futures arbitrage trade works because there is buying of the CME futures, and there is strong demand, which basically drives up the funding yield, which is why the arbitrage trade works. So it's actually transmitting actual demand into the ETFs, but the demand is still real. Just when it's buying of CME futures, then it's of course not this fresh new money that the ETFs have catalyzed. It's demand that was already kind of investors, traders that were already in the crypto market, but it is still demand.
Okay. So short answer, no. Long answer, very interesting. So, but thanks everyone for joining today's super interesting session. Thanks, Kat, again, for really unpacking all of this stuff and joining me. for a deeper dive into this and other important topics driving the crypto markets, please download this month's House View. So go to our website, the Learn section and the Research and Education section. You can download it there. Please also visit our website and join our 30K plus community on LinkedIn to stay update on our launches, news, and research. So everyone, thanks, Kat, and thanks for joining us again.